Hey guys, today we'll be analyzing four stocks: Alibaba, AIG, Nokia, and Micron Technology. Before doing so, I would like to remind you our training course, which is learn how to trade financial markets with indicators and techniques unique in the world of trading, which has been published on greenfire.com, or you can find as well on udemy.com. Let's start with the first one, Alibaba. As you can see here, we have a weekly chart, so every candle is a weekly one. The price seems to be enveloped within an ascending channel created by linking all these point of lows in terms of oblique support and in terms of highs with the oblique resistance. So what's happening right now is that we have experienced over the current week a long white candle which has been hitting the oblique resistance. So right now, in terms of CS to A bands, we see that the price has crossed above the upper band, which means actually that we should be expecting a reversal from this point, at least to this area, so $216 from where it goes the lower CS to bands. Now, if we analyze the derivatives of the Guppy moving average, we see that the price, actually the derivatives are really so much above the zero. Again, this is another confirmation that we should be expecting a reversal from this area. Now let's move on and let's analyze AIG and let's see what we can retrieve for the AIG company. Okay, now actually the scenario will be quite different. So while for Alibaba we are experiencing a strong weekly uptrend, for AIG the scenario is completely different, and the reason is because, as you can see here, the price is in a descending channel. Actually the price, after breaking below this point of low, this horizontal support passing by on around 36-37 US dollar, we've seen a strong break, okay, with a new low, relative low around 18 US dollar. From there we've experienced the retracement to test, okay, the X support, which is now right now the current horizontal resistance. So what the CS2 bands are telling us now, we should change the volatility based on the historical AIG volatility, and actually I should reduce. So in terms of trading, we see that the bands, the CS2 bands, are oriented downwards, which means that the derivatives is now below the zero, which is confirmed here from the derivatives of the Guppy moving average. And so which means we should be trading AIG on the short side. So when we could trigger a short, actually around this area where again we've seen the X support being broken, or actually around here, so around 33-34 US dollar. In terms of upper band, if we reduce the volatility, the upper band is passing by around 43-42 US dollar again, which means actually we might see the AIG rebounding around this area. Okay, so again, I will not trade AIG right now, but I would wait the price to go up at least to this area. Okay, so some fake breakout above the horizontal resistance. Again, in terms of trading, I will trade AIG only on the short side. Let's move on and now let's analyze Nokia. Again, a different scenario from Alibaba, Nokia Corporation, and it is quite interesting what the chart will tell to us right now. We can, okay, in terms of CS2 bands, now we should change the volatility as well, but we don't need it because it's quite clear what is happening right now. As you can see here, Nokia often experiences a breakup, okay, below the horizontal support. It happened here, okay, with a long black candle, and it is happening right now here. So actually what is happening right now is that the price has tested, okay, the X support, which is right now and resistance. So I will trigger a short definitely below this area. So below 4 US dollar, I'm definitely shorting Nokia. Let's move on and let's now analyze the last one, which is Micron Technology. And let's see what the chart can tell to us, okay? Something different as well. Now, in terms of Micron technology, what we see is a completely different scenario. So while Alibaba is the strongest stocks over the four stocks analyzed, and while AIG seems to be the weakest one, okay, Micron technology is moving in a range, it's really great in terms of trading, because, and the reason is because we can definitely go short around this area, 60 US dollar, okay, where we have actually the price has tested so many times this area, okay, 1, 2, and 3 times, okay, and from there we've seen that Micron technology has retraced back. Now, in terms of CS/A bands, we could reduce the volatility in order to better envelop, okay, the price, and let's see what we can retrieve in terms of upper band or in terms of lower band, okay. So now what we see here is that the price, okay, the upper band is passing by around this area, 60 US dollar as well, okay, from where we've seen a retrace, and in terms of lower band we have here 38. So actually we have a very wide range from where we trade, so I would trigger along only around this area, 38 US dollar. So I would be waiting 38 or 35, because here we have another support around even 30, okay? So all this area between 30 and 35 is a perfect area where we could trigger along. Why I will not trigger a short before the test of 62 US dollar? Thank you guys.